Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and this is the FX Rundown. The dollar index is working to finish a little higher today in the green after PPI came in better than expected. This number has been hot for a lot of this year. Prices for producers are higher. This is a aftermath of the trade war. But tomorrow's CPI number is going to be much more closely watched. It's coming softer than expected. The year-over-year core number for 3 months in a row. Last month, the month-over-month one was right in line, but it's overall been soft for the last couple months. So this is going to really kind of lead into that Fed meeting next week. They've been less hawkish. If the CPI number comes in soft as it has been, then you could even encourage, or it could encourage the Fed to be potentially slightly dovish, but certainly would support them being less hawkish. So this number is going to be very closely watched. It's going to set a tone for you tomorrow. Again, the dollar index is trading higher. It's right up against that key resistance, 97.5. Really, the level is 97.80. Previous high earlier this year, a couple of weeks back, failed at this level. This is going to be a key test. Going back to May of last year, it sold off hard into here, consolidated with the 97.70 high, and before selling off again. But this is the third time up here, and it's been pretty constructive holding. So a close out above 97.80 is going to be bullish, but that CPI number is going to dictate that. To the flip side, you have the euro that corresponds with about 113. We have some support in the euro that it's testing into right around 113.25. That it's sort of holding on the day. It's tested just below it. It did trade up to 114 overnight. Now this was our pivot. Although the market finished yesterday below there, we felt that it was going to test in, and it was a matter of holding it or not. And if it did hold it, we said that the picture for the bulls would be much rosier. It didn't. Brexit fears, etc., had of all weight on the euro. The pound got crushed yesterday and gave up some of the gains today after decent data. So overall, the dollar is the safe haven. Finding those safe haven wins in the market, and the euro is seeing that it's been a casualty to the Brexit discussion. Moving on, though, the yen, it has been finding a path of least resistance lower. The rallies have been sold into pretty harshly. Ultimately, though, there seems to be limited downside given the fact that the dollar is way up here. That's the only reason we did not go bearish on the yen in the FX Rundown report last night. Look at that major 3-star support. It is key to watch. A close below there could start to pick up selling, though. So be careful. You don't necessarily want to be buying against here. There really seems not to be too much of light into the tunnel. We are upbeat on equities and find value down here. So if the equities rally, there isn't much reason to think that the yen would rally as well, unless that dollar really sells off. But if the equities are rallying, the dollar's selling off, still we don't see the yen looking to capitalize too much on that. And again, remember, those rallies in the yen have just been sold into so steadily all year long. There's some data coming out of Japan tonight, machine orders, as well as a couple other key reports. So keep an eye on that. But the data hasn't moved the yen much. It's been the overall the risk appetite around the world, and what the dollar's been doing too. But again, these rallies are just getting sold into the yen. Moving on to the commodity currencies, Aussie dollar and the Canadian. The Aussie's been constructive for all matters considered here. The more upbeat risk appetite, given the positive news on the U.S. and China trade front early today, helped the Aussie dig out against major 3-star support. We like the Aussie. If you manage your risk, as we talked about, there is a line in the sand where this thing can hold and become very constructive. We like the upside, given the U.S. and China potential to see at least for this year into the end of December, positive news on trade. It may not be until January until we get some negative news that could come out, and I think the Aussie could capitalize on that, especially if the U.S. dollar weakens following the Fed meeting next week. The Aussie, again, is in a prime position to capitalize. The Canadian dollar, that's a different story. The data's been actually decent, but ultimately you're seeing the trade, sort of that overall international trade conflict has been a headwind, but now you're seeing the energies as well take a hit, and hitting Canadian dollar and price action wise, and it's just below some key technical levels. We've discussed it. There is just needs to really get out above and close back above 75, and really even 76 to neutralize such weakness. So we really don't see anything, a clear shot there. But again, watch that level of close above 76, which is a ways away, would only neutralize this trend. Give us a call. We're here to talk. We're here to help with anything on the board. 312-278-0500. You can email us info@bluelinefutures.com. You can check our website for updates. updates, and you can sign up for a free trial of our research there. But remember, futures trading involves substantial risk of loss. It's not suitable for all investors. Thank you.